Welcome to the Riskwiser Zone. I'm your host, Louis. We're glad you're joining us today as we navigate the ever-changing landscape of stocks and finance. As we always say, risk comes from not knowing what you're doing, so let's dive in and get informed. We've got a fascinating show for you today, with news from the tech sector that's sure to make some waves. Applied Materials, a leading manufacturer of chip-making equipment, has reported its fiscal third-quarter earnings, and the results are a mixed bag. On one hand, the company posted revenue of $7.3 billion, surpassing Wall Street expectations. However, its forecast for the fourth quarter was hit by weak demand in China and export license woes, sending its shares down nearly 13% in extended trading. Now, let's take a closer look at what's driving this volatility. The ongoing tariff negotiations between the US and China have created uncertainty, making it challenging for companies like Applied Materials to forecast where the economy is headed. This has resulted in erratic orders from customers, which is impacting the company's revenue projections. As Bryce Hill, Applied CFO, noted, "We are expecting a decline in revenue in the fourth quarter driven by both digestion of capacity in China and nonlinear demand from leading-edge customers given market concentration and fab timing." This is a complex issue, folks, with many moving parts. Tightened export controls on advanced semiconductor manufacturing equipment to China are also preventing companies like Applied Materials from selling their most cutting-edge tools to Chinese customers. To put this into perspective, China accounted for 35% of Applied's total sales in the July quarter, making it an essential market for chip companies. However, with chip makers pausing new equipment orders to absorb recently added capacity for older generation chips, Applied's revenue is taking a hit. Now, I know some of you might be thinking, "Louis, what does this mean for my investments?" Well, that's a great question. As we always say on the Riskwiser Zone, it's essential to stay informed and adapt to changing market conditions. We'll continue to monitor this situation and provide updates as more information becomes available. In the meantime, let's take a step back and look at the bigger picture. The tech sector is going through a period of significant change, with trade tensions, regulatory uncertainty, and shifting consumer demand all playing a role. As investors, it's crucial to stay vigilant and be prepared for unexpected twists and turns. That's all for now, folks. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Stay tuned. Welcome back to the Riskwiser Zone. We're glad you're still with us as we dive into the world of economics and risk management. In our previous segment, we explored the intricacies of global trade and its impact on markets. Now, let's shift our focus to the United States, where tariffs have been a major talking point in recent times. We've got a fascinating story for you today as manufacturers and businesses navigate the complexities of tariffs and their effects on the economy. According to recent reports, some companies are feeling the pinch, while others are finding ways to adapt and thrive. For instance, Alex Salton, a manufacturing expert, notes that the tariffs have created a challenging environment for businesses, but it's also an opportunity for companies to rethink their supply chains and explore new markets. One such company is United Health, which has seen its shares slump significantly this year due to concerns over tariff-related inflation. However, with the recent news of Berkshire Hathaway's investment in the company, things might be looking up. As Joe Saluzzi, co-head of equity trading at Themis Trading, points out, the question is, has the tariff gotten into the price of goods yet? And it appears that there hasn't. This raises interesting questions about the potential for future growth and the impact of tariffs on consumer prices. Meanwhile, the Federal Reserve is keeping a close eye on the situation, with some experts predicting a possible interest rate cut in September. Chicago Fed President Austin Goolsbee has sounded a cautionary note, reminding us that the economy is still vulnerable to shocks. As Eric Thiel, Chief Investment Officer at Comerica Wealth Management, notes, "We will have to wait for the personal consumption expenditures data which the Fed prefers and has been running a bit hotter than CPI of late to see how much inflation is finding its way into the system. As we analyze the situation, it's essential to consider multiple perspectives. On one hand, tariffs can lead to increased costs for businesses and consumers, potentially slowing down economic growth. On the other hand, they can also create opportunities for domestic industries to grow and thrive. For example, some companies are investing in research and development to create new products and services that can compete with imported goods. In conclusion, the situation is complex, and it's crucial to weigh the potential benefits and drawbacks of tariffs. As we continue to monitor the developments, one thing is clear: the economy is constantly evolving, and businesses must be prepared to adapt to changing circumstances. We'll be keeping a close eye on these developments and bringing you updates as more information becomes available. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're wrapping up today's show with a look at the latest economic developments from Japan. The country's economy has posted a stronger than expected growth in the second quarter, thanks to resilient exports and capital expenditure. According to the latest data, Japan's GDP rose 1.0% on an annualized basis, marking the fifth straight quarter of expansion. Now, this is certainly good news for Japan, but it's essential to consider the potential risks and challenges that lie ahead. The imposition of U.S. tariffs on Japanese goods, particularly automobiles and auto parts, could have a significant impact on the country's exports in the coming months. As we've seen in the past, trade tensions can be a major source of uncertainty for investors and businesses alike. On the other hand, Japan's private consumption has shown signs of improvement, with a 0.2% increase in the second quarter. This is a crucial aspect of the economy, as it accounts for more than half of Japan's economic output. The Bank of Japan will likely be watching these trends closely as it considers its next move on interest rates. It's also worth noting that the U.S.-Japan trade deal struck last month has helped to reduce some of the uncertainty surrounding trade relations between the two countries. However, the ongoing trade tensions between the U.S. and other major economies, such as China, will continue to be a source of concern for investors and policymakers. As we conclude today's show, it's essential to remember that economic developments can be complex and multifaceted. It's crucial to stay informed, consider different perspectives, and assess the potential risks and opportunities in the market. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution.